Is it one rule for cyclicals as an asset, as a set, or do you distinguish between them?
Yeah, it's a great question. Actually, the market has distinguished very much between the cyclicals. As a group, they've outperformed by 30%, just as the autos have, and we think they will continue to do well, even though we're getting into the latest stages of the cyclical rally. We've got another 5% or so upside for cyclicals, as I said. And I think that's where your question is aiming. There is a subsector of the cyclical space that simply hasn't performed yet, and there's a lot of head scratching among investors, a lot of interest. What about the likes of banks, of energy companies, of airlines? They've been left in the dust, hardly any outperformance so far. And the big question for investors now, have they simply stopped to be cyclical? Have they stopped to react? Or are these effectively the biggest opportunities in the market now simply because they have so little of the good news priced in? And we are certainly very much in the second camp. We think there are idiosyncratic factors having to do, especially for banks and energy, with the earnings cycle, which had idiosyncratic headwinds. We think these headwinds will subside, allowing them finally to join their confreres, their cyclical peers in rallying.
So you think then that, the virus is going to be brought under control and that'll finally release some pent-up demand for airlines and cruises?
I think that's a good way of putting it. Clearly, the virus story, as Mark was already telling us, has become more complicated, and the visibility is lower and the uncertainty higher than we had hoped for. But we've seen a very clear pattern over the last couple of months, which is the virus spikes when people engage in irresponsible and high-risk activities. If the consumer becomes more cautious, more restrictions are being imposed, then typically that allows the virus to fade. Furthermore, we've got a very rich pipeline of additional tools to bring the virus under control that simply haven't been at our disposal over the last couple of months. Think about the vaccine. US Pharma team now thinks the vaccine will start to be rolled out in Q1 of next year. And also think about the advent of high-speed, quick turnaround, self-administered tests, which should allow us far more precisely to determine everybody's infection status. So what we effectively position for is a situation in which the very scary increase in virus numbers that we've seen starts to subside, partly helped by these additional tools that will increasingly come online. And as you say, this should allow the sectors that are sensitive to this to do well.